Good morning, everyone. Welcome to our market breadth indicators. Happy Sunday. Hope that you all having a great weekend, relaxed, and trying to rebalance again, recharge for another crazy week. Next week, it's going to be another crazy and insane week. We have a Fed meeting, so it will be one of the biggest and most important Fed meetings that we will probably have because of the yields that we are seeing and all the talks. Let's see if the Fed is going to pronounce and say something about it. So right now we are going into the overall market picture. I'm going to share with you my analysis on some of the market breadth indicators that I use on a daily basis and trying to see where we are and where we can go from here. So enjoy and let's start. So starting with the first one, new highs minus new lows. So this basically measures the numbers of stocks that are making new highs versus the stocks that are making new lows. On a bull market, you want to see more stocks making new highs than stocks making new lows. So that's pretty much bullish, and that's exactly what we continue to see. More stocks making new highs every single day. So this is a complete bull market versus what we saw last year on February and March 2020, that we saw more stocks going down than stocks going up, and that's a bear market. And right now we have a full board bull market situation with pullbacks and corrections on the way. It's pretty much normal. We had it on September, we had it also here on October. We also had slightly here on this last correction. So it's normal to have pullbacks and corrections on the way, but overall completely different from what we saw here on March, day after day after day, with a bear market. Right now, complete bull market on this one. The same indicator online, also the same. Full bull market right now. This indicator is already above the February 2020 highs, and compare the situation with what we saw on the bigger correction. Okay, the bear market and the bear shock that we had, the market shock that we had with COVID on last year. Completely different. The slopes are pointing up. It's above the moving average, making higher highs, higher lows. So pretty much bullish, and we have pullbacks on the way. It's normal to have pullbacks on the way back to the mean, but right now complete bull case scenario here. Looking for the advanced decline issues, exactly the same thing. On this last correction, the indicator was a bit overbought, and we have a pullback on the advanced decline issues back and stopped exactly where it should. Okay, see that from the last corrections and that we had, we stopped exactly on the same level. Okay, it's a mean reversion and resume back up. So we continue here on a bull case scenario, and a bull market making higher highs, higher lows. Overall, okay, we are going for a specific sector, tech names that are lagging, and that's a yellow flag, but not necessarily a bear market. A bear market, we have every single sector going down, something like we saw on last year on February with SP 500, small caps, Dow Jones, NASDAQ. Every single sector was going down. That's a bear market, and right now we have a shift on the market going from growth to value, and that's completely different. Okay, looking for the McLaren oscillator, we were on this correction pretty much oversold. Okay, pretty much oversold. Same thing that happened on the last correction, and right now we recover the bull case and the bull side with some positive numbers, but let's see if things are overeating. We will go over there. Not overbought. We are not overbought. We have room. Okay, we have room to go even higher. Okay, before entering overbought conditions, and that's something that I will be monitoring for a possible reversal pullback and the start of another correction if we are going to hit very overbought conditions that can trigger another pullback. Looking for the McLaren Summation Index, gave a bull cross this week. Okay, so when you have bull crosses, it favors buy the dip. So right now we have a bull cross, it favors the buy the dip. What I'll be looking if this bull cross is going to hold, or we are going to have something like this, okay, something like this, and another cross here, another bear cross that will favor the start of another new correction. But something that I'll be looking for now, it closed the week on the bull camp, on the McLaren Summation Index. Looking for the percentage of the SP 500 stocks above 200-day moving average. And that's also another indicator that I use to show if we are on a bull or on a bear market, okay? We have 86%, we finished the week with 86% of the SP 500 stocks above the 200-day moving average, okay? One thing is for sure, we will not have a bear market while we have most of the SP 500 stocks above the 50 and 200-day moving average. That's for sure, okay? What we saw on last year on the bear shock and the market shock and the big bear market that we have, it was completely different, where we saw below the 50%, we have most of the SP 500 stocks below the 200-day moving average. That's bearish, okay? Right now, we will not have a bear market while we have most of the SP 500 stocks above the 200-day moving average. A line in the sand that I use is around 75%. We are right now at 86%, so completely bull case for now on the market. Looking for volatility. Volatility is fading, okay? And one thing that I continue to see, and that's something that I want to see if we are going to break or not. We are still with the VIX above 20, okay? Something that we want to see to have more relax is for volatility to crash, and if we are going back into the lower, okay, to below 15, okay? But that's something that I will follow up. But right now, every spike on volatility was short-lived. It can take spikes on volatility for 1-2 days. It's not easy to play volatility names because, once again, Fed is behind the wheel, and the market, it's getting difficult to right now to bet on volatility spikes because they are really short-lived. No fear on the market. Compare this situation, okay? Compare this situation that we had last year to what we are having right now. Slopes pointing up, okay? The indicator below the average, the slopes on the average pointing down. So no real fear on the market for now. No credit risk. See here one indicator that I use for credit risk. We had credit risk on last year with the bull cross here, the slopes crossing and crossing up and going higher. We don't have that right now. Slopes pointing down and making lower, this indicator making lower lows. So no credit risk. Once again, Fed bringing the necessary liquidity to the market. We will not have a bear market with Dow Jones, SP 500 and small caps making new all-time highs. Okay, that's for sure. And once again, Dow Jones this week made new all-time highs, SP 500 new all-time highs, small caps new all-time highs. So bull case scenario, bull market. But once again, in my opinion, this move was way too fast, okay? And we are already at the top of the Bollinger Bands, okay? And we start hitting some overbought conditions. Overbought can remain overbought? Yes, it can. Okay, yes, it can. We can continue to make, before triggering another bigger correction, we can go and continue to make higher highs, higher lows. But in my opinion, what would be wise would be a pause. We can have a pullback, back to the mean, but the volatility going down, in my opinion, it will make that the move, it will be not as fast as we options traders would like to have a faster one, because the faster it moves, the more the premium it moves and the more profits we have. Right now, what I would expect, the Dow is getting extended, the move very very extended, and it starts hitting overbought conditions. So I'm expecting a possible pullback, some fading or some consolidation. It will be the most painful one. Some consolidation, okay? Tight range, flagging for a possible resume back. But right now, at least as we closed on the week, we closed on the bull camp, but a bit extended, okay? Looking for the weekly, it's a big weekly candle, okay, big weekly candle on the Dow. One thing that I've been talking on the last couple of videos, every pullback, see here, every pullback stop weekly on this line that I have. We have here a bear situation on the Dow last year at the last quarter, but it resumed back up immediately on the next candle. Otherwise, every pullback has stopped, and this last correction stopped exactly on the moving average, on the weekly moving average. The oscillator is not overbought, so we have room. See that on the start of 2020 we were getting overbought on the Dow, and that triggered a big correction, okay? We have room to go up before entering overbought conditions, so we still have room, but on these kind of candles I'm a bit scared actually to chase these kind of candles because the bandwagon starts going up, we start having a parabolic move, and we can have a big correction one of these weeks. So no one really knows, and also no one knows what the Fed is going to say this week, so they can trigger. No one can really predict and anticipate what the hell they are going to do, and they can trigger a big correction. Yes, they can. Don't believe they will do it, but it's worthless what I believe. It's worthless what I think. My opinion is really worthless. What matters is price, so I will follow price. So if we have another leg down and the start of another correction, we will readjust and we will go on the wave. So for me, it works wherever the move. Right now, looking for the biggest laggard that we have is NASDAQ. This is a yellow flag, okay? We have a big correction. We had a big correction on NASDAQ. We had a mean reversion, so we see that once we hit the bottom of the Bollinger Bands, we hit oversold conditions and we have a mean reversion. We had another big wave down, okay? Hit the bottom of the Bollinger Band, got back into the mean. So we are having mean reversion, okay? So this week, the big question and that we have right now is if last week was an oversold bounce and we resume back down, okay? And when we resume back down, if we going to resume back down, if we are going to make a higher low, so 12,208 on NASDAQ, it will be my line in the sand, and I'll be extremely bearish if we break below. We have the 200-day moving average, okay? That's the next logical level, but we need to see it. Or we are going to have a trend change that NASDAQ will make a higher high and it will break above, and that's what will trigger my bull case scenario. A break and stay above last week highs. That will trigger, for me, bullish on the tech names. Otherwise, what we can have, a fade continuation, and from there we will see if we are going to make a higher low, and from there we have the bounce, or if we are going for a double bottom, okay? If we are going for a double bottom here and bounce, or if we break down, make a lower high, a lower low, and back to the mean reversion, okay? So we have some scenarios and we need to be prepared for everything. It's worthless to try to anticipate what is going to happen. The NASDAQ was oversold. See that the oscillator back to the neutral, okay? And right now, if we go on the oscillator, go above 50, we have room and we recover the bull case and we start making higher highs, higher lows. And the NASDAQ should play catch up on the rest of the market with SP 500, Dow Jones and small caps going higher and making new all-time highs. And we will have a slingshot up back, and that will be very painful in my opinion. If that happens, that will be very painful for shorts, with a big short squeeze going into the top of the Bollinger Band, okay? no clue if it will happen. Okay, right now what we are seeing is that with the yield spiking, and they will continue to go up. Honestly, in my opinion, they will continue to go up. The big question is if the market already have the necessary rebalance on the portfolios and the revaluation of the tech names. Okay, that's the big question. That's the $1 million question. I don't have the answer, but one thing that I'm sure is that if the market already finished the revaluation, okay, the rebalance that necessarily from the adjustment from the yields, then we will have some consolidation, and from there we can trigger the next move. Otherwise, if the rebalance didn't stop, didn't end, then we can have another pullback. But one thing is for sure, price will tell us what the hell is going to happen next. But we are not on a bear market, not even close. Okay, looking for the weekly, see that the weekly stopped exactly on NASDAQ, and that's one of the things that I'll be looking. That's why I'm giving a chance on NASDAQ to recover the full bull case scenario. It stopped on the weekly exactly where it should. Okay, see that every correction on the on NASDAQ that we had on the past stopped exactly at the same level that we are right now, and that's why I'm open-minded for if we go above these week highs. Okay, this is the level. If we go above this level, the last week highs, then I believe we can have a big short rally up with NASDAQ playing catch up on the rest of the market and going into new all-time highs. But we need to see it. Otherwise, if we break below last week, these last week lows, okay, if we break below the lows, I'll be looking for a possible double bottom here. But if we break down, then things can get very ugly, okay? Because we can have something like this, a NASDAQ correction, or something like this. I believe that it will be not as fast as we saw on the last year, but we can have a NASDAQ attack, correction, okay, as we saw in 2018. Okay, that's possible, yes, but we need to see it. With this shift on the market from growth to value, we see that small caps, Dow Jones and the SP 500 are leading the way. Big huge slingshot up from the small caps, hitting the bottom of the Bollinger Band, recovering the mean reversion and going in 1 week. It's amazing the move that we saw. $25 move, $25+ move on small caps on IWM, from the bottom of the range all the way into the top of the Bollinger Bands. So big expansion. What will happen next? I'm always scared with these kind of moves to chase. Okay, see that last time we had it. We had some pullback, we had some consolidation, and from that start off a pullback. So can we go higher? Yes, we can. Of course we can. But I'm not chasing the small caps move, in my opinion. It can go, yes, but we had 1, 2, 3, 4, 5, 6 days. It should consolidate, pullback, mean reversion, in my opinion, something similar to what we saw here. Okay. So I'm not chasing small caps right now. The weekly candle, amazing, beautiful weekly candle, and it stopped exactly as NASDAQ, exactly where it should. Okay, exactly at the support from the last corrections. Small caps stopped exactly where it should, 207, and bounced. And this last week, huge recovery. Honestly, I was not expecting such a fast move, but it happened. Right now, for me, for my own risk management, it's tricky to chase this one because I believe we start hitting very overbought conditions. Weekly is also overbought, so for me it's tricky. But stay open-minded because overbought can remain overbought. See that here we have a kind of a move that we hit overbought, and see what happened on the following weeks on small caps. They kept going up, so we will try to see where we can put our money. SP 500 also making new all-time highs. It made a pause here on Friday and closed basically flat, slightly on the green, but basically flat. What we want to see for the bull case needs above 39.60. So I will be bullish if we go above 39.60, the next logical level 4000. That will be the level. But if we go below, okay, that's my support, below Friday lows 39.15, what I'll be looking, a mean reversion. Same thing, goes up, goes down, goes up, back to the mean. So we can have a small pullback in next couple of sessions for a mean reversion trade. That's a possible scenario. But if we go above 39.60, what's the next level? Okay, 39.99. It's the top of the Bollinger Band, so that's a possible target also. We are not overbought, so we have room for upside. So we need to be open-minded for possible further upside. Also on the weekly, we have a nice follow-through. Same thing. It's amazing how technical analysis work and how the market respect the levels. Okay, on every pullback, the weekly chart stopped exactly where it should. On each correction, it stopped exactly at the moving average. So on this last pullback and this last correction, stopped exactly at the moving average and bounced. Okay, and we had follow through continuation with a move higher on the SP 500. The weekly chart not even overbought, so we have rooms to go before entering overbought conditions as we start seeing at the beginning of 2020. Okay, and we have even lots of rooms to go. See here the overbought conditions on the weekly before triggering a next correction. So we have lots of room for upside. So as summary, where we stand, we are on the bull camp. No doubt about it, okay? We are on a bull market with SP 500, Dow Jones and small caps leading the way. We have a shift from the growth, from the tech names going into value. And we need to be and I believe that this week will be very decisive from what we are going to hear from the Fed. Okay, so today's meeting and on Wednesday we should have a more clear view on what the Fed is going to say. Based on that, we will see how the market will. So we need to be very careful on Wednesday and mostly cash and be prepared for what the Fed is going to say and how the market will react to that. It's more important how the market will react, how price will move. Are we going to break and start making NASDAQ leading the way and pushing back up? That will be the most bullish case scenario. Or are the spike on the yields continue and we will have the moves on the reopening names, on the financial, on the energy, on the industrials, and that's the way. And the tech names will have another bigger correction. Okay, so we cannot predict. No one knows what Mr. Powell is going to say. We need to be mentally prepared for both scenarios. But right now, bull market, specifically with SP 500, Dow Jones and small caps. Small caps getting extended, Dow Jones extended, SP 500 have some room, so we can watch some names there. But I'll go next week with a bit more cautious because the move that we saw last week, very, very fast. We should consolidate. We should have small pullback, in my opinion, to clear the overbought conditions that we start entering with the fast move from last week. Okay. With this said, wish you all a great Sunday. Enjoy. Don't know if where you live, if you have a sunny day right now. Here I have a sunny day. So I'm going to try to take some hair, spend some time to relax and a little bit to get ready for tomorrow. Tomorrow I will share with you before the market open some updates, also the stock charts, watch list with the biggest names that I had, trying to build a trading plan for the day and for the week on those names, trying to help and guide everyone the best way I can. With this said, wish you all a great Sunday. Enjoy it. Spend your time the best way you can and stay safe, everyone. Thanks for watching. Bye bye. Have a great Sunday.